Hey, what is up, team? Chuck with Traders War Room. We're going to go ahead and get started with our live training session. Remember, this is a premium event for you guys because of your loyalty and support for the TWR. This is going to be about 15 minutes. We're going to crack it in. Today's topic is going to be sharp reversals, how to spot them, protecting them, and recovering them. Real quick, if you guys haven't taken a look at the Trading University, please do so now. Digital courses on various topics, self-paced, all between 8 and 10 weeks of curriculum. You get lifetime access anytime you get into one of our courses as an alumni, and you can find all the information on traderswarroom.com. And remember, we got the one-on-one mentoring. We're booking 4 weeks out in advance. So if you need some structure, you need some revamping, you need a little bit of one-on-one love, go ahead and hit us up, and we'd love to get at you, man. No one's going to beat our prices. No one's going to give you more for your money, and you get the recording plus any materials we cover inside of the training session. And also, active campaign, our 2023 campaign is Make the Market Bend the Knee. We have an active campaign challenge out there. We are looking for a 2024 campaign. We want you guys to come up with the campaign slogan that we're going to use for the entire year of 2024. What do you get for coming up with the winning campaign? Well, I'm glad you asked. December 1st, we're going to pick the winning campaign, and you're going to get all live access to all 3 platforms, the Discord, the instant message, and the text message alerts until you become no longer a TWR member. You're going to get to pick one of your Trading University courses, and you get lifetime access to that, which includes the alumni, all the updates, all the normal packages. We're going to give you a box of TWR swag, and we're going to give you some cash. So send us your campaign notices. You can direct message them. You can put them into the chat group, all that stuff. We're going to cipher through them, and we're going to pick the winner live December 1st, and we'll let them know, and then we're going to push out the prize to the people. Now, without further ado, let's go ahead and get into it real quick. One moment, please, while I pull up the screen. All right, so this is going to be a shorter class than normal. Like I said, it's going to be about 10 minutes, 15 minutes long, but basically we're going to go into a single chart, and I want to talk about what kind of happened with this reversal that we had. All right, and we're going to go into the 5-minute chart, which we are right here, and we're going to look at the previous day momentum, right? This is the QQQ, and it's a great idea of looking at what we're talking about. We're going to go over the Q, we're going to go over the SPY, and then we'll go over a couple of the big boy ones as well, so you can kind of see what happened. But basically, yesterday's market, it was relatively in range. We were pretty tight. If you notice right here, the whole market day, right? You're within about $2, 371, 368, right? So $2-3, you're kind of ranging. And then towards the end, we got a really strong bullish push coming off of the bottom. All right. So we got a nice bounce. And what was significant about this is towards the end, we broke higher, significantly higher than our previous high of the day going into the close, which signaled a high probability of continuation for the bullish run, which is exactly what we did. We went ahead and went long on some of our trades. Everything looked good after hours. Pre-market popped up a little bit, started selling off a little bit into CPI, and then we kind of leveled out at our previous breakout level that we had. Now, this was important, okay? We popped up initially and we started consolidating, which was really good because we had high hopes that we were going to come out of this consolidation with the push higher because of the digestion of the CPI, because CPI really wasn't anything unexpected and it really wasn't a bad report, right? But then, of course, we get some of these some of the Fed minutes coming out and talking about higher for longer and stuff like this. And what really affected it was that the idea was that a higher probability of another rate cut, or excuse me, not rate cut, but another hike was more pronounced on the table rather than just being another pause. Most of the investors inside of the equity market are thinking that the rate hikes are done. The Feds are just posturing because that's what they're supposed to do, but they're done hiking and they're just going to continue to pause and look at data as the data continues to dwindle and dwindle. But What this kind of gave into about this time frame is we got some of that data coming out and some of the Feds talking that, yes, the high probability of us actually getting another hike was on the table, and that cutting, right? Because, investors love cutting, right? Cutting was going to be pushed out even further than anticipated, of course. So that's jumping. And you already got the, Russia stuff, right? And Ukraine, you got Israel and Hamas. And then you just got the mixings for, earnings season starts next week, right? And so you just got a pretty significant sell-off coming straight through all the way down to our previous level. And then you kind of got to bounce. Now, here is the deal, right? How do you spot these? Well, there's two things. You got to be able to pay attention to the news, but this right here is hard to spot because, as you can see, this is very sharp. Okay, this is a knee-jerk reaction. Basically, what we did though is, since we were long coming into this we don't go long inside consolidation. Okay, you don't get into your trade during consolidation. You wait for the break. All right, we were already in the trade, so we were waiting for the break to the upside. You get your plan ready for the break to the downside. We went ahead, and once we breached our previous level, we went ahead and cut our longs and started shifting to shorts. And we made a pretty decent trade on QQQ inside of the challenge. We went with a out of the money option and, came in, I think, at 45 and ended up doubling. And then we made another trade here at the bottom where we went ahead and got into another one again once we started popping up. That one lost a little money going into close, but here's the significant thing about closing, right? We never closed above our 50 on the 5-minute chart or the day, right? So we stayed below one of our major moving averages, which tells us that the momentum is still pretty weak, and the high probability of us getting the continued pressure to the downside based off of this is high probability. So we went ahead and stayed short on our trades just to see if we get that gap down tomorrow. During bell volatility, we're able to come out. Also, selling volume towards the end was extremely high. So sharp reversals, right? How do you spot them? Well, you got to use the indicators. Now, you can't have your chart clouded with a whole bunch of indicators. As you can see, I use basically 4 indicators on my main chart. I use my lines, but those aren't indicators. Those are just spots that I put, okay? The indicators are really giving me the idea of what I'm looking for in spotting. My EMAs are the blue and the yellow, and these are telling me what's going on with my moving averages, right? My 50 is kind of my baseline. The red is my 50, just regular MA, okay? My slow moving average. Now, this is user's preference, but if you're a momentum trader and you're trading off of volume and price action, which you should be if you're an active trader, okay? And by trading, I'm talking about you're looking to buy today, flip tomorrow, or buy today, flip today, or buy today and flip in a couple days, okay? That's all active trading, short trading. We're not long-term swing trading where we're buying today and expecting a 2-week, 3-week type of move, okay? We're looking for a very quick, plus up on our initial trade. So how do we spot these? Well, we're looking for 3 reasons why to buy, and we're looking for 1 reason to exit, all right? And we're using indicators, main chart indicators for our first. You got a question? One moment. Okay, coming back into it, right? So how do we get this to figure out what we're doing? Well, one of the hallmark things is we got to use our main chart indicators to give us our first idea, okay? So like I was saying, if you're a trader and you're an active trader, you're utilizing moving averages most likely on your main chart. And even if you're using boiler bands or using something else, right? If you look at the description of them, what is one of the key components of those indicators? It's a moving average, right? Usually the formula is based off of some sort of, EMA or SMA moving average and some sort of standard deviation, right? And so basically it's all the same stuff. It's all based off of momentum and moving averages based off of volume and price action. So we got our EMAs and we're looking for price action, crosses, and movement on that. We see right here that we got this. Now, of course, we saw this happening, but we were waiting for the reversal, and this happened very quickly. So sometimes these are hard to catch, but we saw this happen. We saw the curve coming. It crossed to the downside, right? Our blues are short, our oranges are long, and it crosses down to the downside. All right, that should be, first reason why, right? All right, we're looking for confirmation now. Price action starts to close on a 5-minute chart below it. Now, what can we do? Well, we can go to dual charts and we can pull up the 15-minute chart. All right. Same thing here, right? We pull up we started closing here, and I'm going to put a line here so you can see exactly what I'm doing. All right. We start closing below right there. Hello. It's not coming over. Why is that? One moment. Let me figure this out. All right, there we go. Okay. It was just a little glitch. All right. As you can see, we're still up here, right? But we're starting to close below it. Our 5-minute tells us that we're starting to close below it. Our next 5-minute candle gives us a complete closing down here. And on the 15-minute, that's when our signal from our super trend gave us the go ahead that we were selling, right? Now, we got a confirmation on the 15-minute. We got 2 candles underneath our moving averages, all 3 moving averages. We got our short moving averages, downward crossing or 50 moving average. This is, multiple reasons here that are telling us to go short. Okay. Not only, and then we start closing below our stop loss level, right? Our previous resistance level when we're above, right, becomes our support, and that becomes our stop loss level. We start closing below our stop loss level, we're out. This is telling us as long as we stay below our moving averages on the 5-minute chart and confirming on a 15-minute chart, we should be going short. And that's exactly what we do. You start going short, right? We're following. On the 5-minute, we start to peak back up here at the bottom. We start consolidating a little bit, okay? You start to see volume flickering, okay? We use our sub indicators to give us confirmation of the trend reversal, right? RSI shows us across to the upside, telling us, hey, guys, trend reversal. We're oversold here. Big time. We're coming out of this. We're starting to see some of that buying pressure coming back in. MACD gives us cross to the upside as well. SMI does it cross to the upside. Whatever your sub indicators are, they're all confirming the trend reversal, all in sync pretty much. Main chart's doing that as well. We don't get the signal on the main chart until right here, which confirms with this thing, right? Now, on the 15-minute chart, we're still below our moving average. So if we're using solely the 15-minute chart, we might have stayed in this trade and we would have lost it until we kind of hit over here, right? With our puts. So we may have lost a little bit of premium push from pushing this way if we were using just solely the 15-minute chart. But we're looking for time frame continuity, and we're looking for multiple reasons to exit. Our 5-minute chart gave us multiple reasons, touching on the trend reversal right here, coming out, pushing up to our short EMA, signals on 1, 2, 3 sub indicators. And then our 15-minute chart even shows us a trend reversal. We don't hit the candlestick, but it shows us a inside bar of a green closing candle, which shows us buying pressure, and the volume is starting to turn green. All this is telling you guys, hey, exit, go ahead and take your profit and exit. You may want to think about going long. Now, we went ahead and held our trade. Well, we took our money over here. We went ahead and got into another one, expecting this to reverse off of the trend line. It didn't. It slowly crept back up, but we stayed below our 50. So we're pretty confident in the trade that we'll go ahead and get the pressure we need from this ascending wedge. Usually, typically, when it's a bearish type of situation, you get like a shallow ascending wedge to the upside, you're going to get another leg to the downside before we get our complete reversal if it happens. And so that's what we're looking for on this one. So to summarize, spotting reversal, we need to have multiple indicators on our main chart, time frame continuity, 5 minutes, 15-minute chart, right? We need to have at least 2 charts when we're looking for time frame continuity, and we need sub indicators that are confirming the trend reversal. So when we get into a trade, I always tell people 3 reasons why to push to buy. Okay, I want you to think of 3 reasons why as 3 into a pie of 100%. If we have 3 reasons, it's not 100% certainty, but you hit 100% of your highest probability of success indicators. If you take one of those away, you're at 66%. If you take another one of those away, you're at 33%. All right. So you're lessening your chance of success based off of your 3 reasons why. All you need is 1 reason to exit. Okay. 5, 3, 1. 5 stocks that we're paying attention to, 3 reasons why to push to buy, and only 1 reason why to exit. And hopefully that's in profit. All right, guys, I hope you got a little something out of this in the class. This was short, sweet, to the point. It was a very quick class. I'm going to put a couple other examples onto the YouTube video that I'm recording this on, and we're going to push this out into the chat group for those of people that missed it. This is only for premium members. The rest of the TWR Market Warrior out there that are free members, they do not get this. Okay. I hope you guys got something out of this. I hope you got some value. And next time we're looking for sharp reversals, remember, we're looking for those 5 reasons why, or excuse me, 3 reasons why to push to buy. And when we say push to buy, that also means to, push to buy on a call or a put, and 1 reason to exit. And all we need is 1 reason here to cross the downside. That's it. We just need the 1 reason to exit our shorts. But we have a plan. We make the plan, and then we start moving in our direction, and we try to strategize. So hopefully you got something out of this. I'll see you guys at the bell tomorrow, and keep a lookout for the video that I got coming out on YouTube later tonight. And if you got a stock chart you want me to cover, send it to me in the chat group, and I'll make sure I put it in there, guys. Chuck Fu, Traders War Room. This is the live training that we are doing. Sorry I didn't get this on Wednesday, but we got it here today. And I'll see you guys on the trading floor when that bell rings tomorrow. Later.